Hello students and hello everyone. This is Teacher Angel and welcome back to our accounting online video lessons. For today, we will talk about the impairment of asset. And by the end of this lesson, the student should be able to know the basic principle for the recognition of impairment, determine the fair value less cost of disposal, value in use, and the recoverable amount, and compute the impairment loss and compute the impairment loss of a cash generating unit. So let's proceed. What is an impairment? So when we talk about impairment, that is the fall in the market value of an asset so that the recoverable amount is now less than the carrying amount in the statement of financial position. To know if the asset is impaired, we need to compare the carrying amount and the recoverable amount. So if the recoverable amount is lesser than the carrying amount, so the asset is considered as impaired. The basic principle is that assets shall not be carried above the recoverable amount. The entity shall write down the carrying amount of an asset to the recoverable amount if the carrying amount is not recoverable in full. The asset will be reduced by the amount of the impairment loss. So this means that if the recoverable amount is lesser, we have to bring the carrying amount to its recoverable amount. So we have to reduce the carrying amount para mo arrive sa recoverable amount. And the amount that will be used as a reduction from the carrying amount to reach the recoverable amount, then that is what we call as the impairment loss. How do we account for the impairment? So first we have to determine if the asset is really impaired. There are indications when an asset is impaired. If the indication exists, then the entity shall estimate the recoverable amount of the asset, which later on you will know how to determine the recoverable amount. But first, let us know what are the indications that the asset may be impaired. So we have here the external and internal sources from which we can determine if an asset is impaired. So external sources include the significant decrease or decline in the market value of the asset as a result of passage of time or normal use or a new competitor entering the market. It could also be a significant change in the technological market, legal or economic environment of the business in which the asset is employed, or there is an increase in the interest rate or market rate of return on investment, which will likely affect the discount rate used in calculating the value in use. We have the carrying amount of net assets of the entity is more than the market capitalization, which refers to the fair value of the net assets of the entity. If we're talking about the internal sources of information wherein these are indicative of impairment, we have evidence of obsolescence or physical damage of an asset. It could also be significant change in the manner or extent in which the asset is used with an adverse effect on the entity, like the asset is part of a restructuring or held for sale or the asset is idle, and evidence that the economic performance of an asset will be worse than expected. For example, the undiscounted net cash flows from the asset are significantly worse than those budgeted. But regardless, if there is an indication of impairment or wala, an entity shall test an intangible asset with indefinite useful life or intangible asset not yet available for use for impairment annually by comparing the carrying amount with the recoverable amount. Again, if the entity owns an intangible asset with indefinite life or not yet available for use, it is required that the entity will test the intangible asset annually. Now let's go to the measurement of the recoverable amount. So how do we know the appropriate amount that will be considered as the recoverable amount. So the recoverable amount that will be compared with the carrying amount shall be the higher between the fair value less cost of disposal and the value in use. So whichever is higher between the two, then that will be the amount that you will use as recoverable amount. If the fair value less cost of disposal is greater, this means that it's more beneficial to sell it now. But if the income, net cash flows generated in the continuing use of the asset is greater than the selling price of the asset if sold now, then it will be more beneficial to use the asset continually. Then you will choose the value in use. The fair value less cost of disposal is the price that would be received to sell the asset in an orderly transaction between market participants at the measurement date. It is also the exit price or selling price deducted by the cost of disposal. The cost of disposal could be legal costs, stamp duties, similar transaction tax, cost of removing the asset, direct cost in bringing the asset into condition for sale. But this cost of disposal does not include any finance cost or income tax expense. So all of these costs of disposal would be deducted from the fair value to arrive at the fair value less cost of disposal. The other um, value or amount that we need to figure out would be the value in use. So the value in use is measured as the present value or discounted value of future net cash flows, which is the difference between your inflows and outflows, expected to be derived from an asset. The cash flows are pre-tax cash flows and pre-tax discount rate. So in computing the value in use, by the way, you have to consider the cash flow projections, which will be based on reasonable and supportable assumption. The cash flow projections shall be based on the most recent budgets on financial forecasts, usually up to a maximum period of 5 years, unless a longer period can be justified. If the cash flow projections would be beyond 5 years, then it will be estimated by extrapolating the 5-year projections using a steady or declining growth rate each subsequent year unless an increasing rate can be justified. So what would be the composition of your cash flows? So if it is inflows and outflows, these are the items that you have to consider. The projections of the cash inflows from the continuing use of the asset, projection of cash outflows necessarily incurred to generate the cash inflows from the continuing use of the asset, and the net cash flows received on the disposal of the asset at the end of the useful life in an arm's length transaction. What you will not include as part of the cash flow projections would be the future cash flow relating to restructuring, to which the entity is not yet committed, future costs of improving or enhancing the asset's performance, cash inflows or outflows from financing activities, and income tax. Again, to determine the recoverable amount, you have to find out if there is a given in terms of the fair value less cost of disposal and or the value in use. So if both of these are present in the problem, you have to select the higher amount. And that will represent the recoverable amount, which you will compare against the carrying amount. Now let's go to an illustrative case. So you have the following details for our machinery. You have the cost and the accumulated depreciation. So the asset has 5-year life and 2 years have already expired. So meaning if the cost of the asset here is 5 million and it has 5-year useful life, And therefore, every year, the depreciation is 1 million since there is no salvage value in the problem. So due to obsolescence and physical damage, the machinery is found to be impaired. The entity determined the following information with respect to the machinery. So we have the fair value less cost of disposal, and we have the value in use. We need to select which amount is greater, and the greater amount is our fair value less cost of disposal. So therefore, we will compare this amount with the carrying amount, which is 3 million. So the difference is 600,000. Since the carrying amount is greater than the recoverable amount, or the fair value less cost of disposal, which is the recoverable amount, is lesser than the carrying amount, then the asset is deemed impaired. Why is it impaired? Because the amount that we can recover from the sale of the asset, which is the greater amount between selling the asset and the continued use, the amount that we can recover is less than what is recorded in our books. The carrying amount in our books is 3 million, but if we're going to dispose the asset, we will only receive 2,400,000. So gamay raman ta og makuha from the asset, then therefore we consider it as impaired. Another example, we have the following details for machinery. We have the cost of 60 million, accumulated depreciation of 20 million, and carrying amount of 40 million. The fair value less cost of disposal of the machinery is 31 million. The following are the details in terms of the cash flows, particularly the inflows and the outflows for the asset with a remaining life of 4 years. So you have the revenue and the costs excluding depreciation. So if ever in the problem, the costs would include the depreciation, we have to remove the depreciation because depreciation is a non-cash item. We only need the cash flows, and therefore, for the cash outflows, it should not include non-cash items. So the net cash flows are as follows. And then to get the value in use, you have to multiply each of the cash flows by the corresponding present value factor. Then multiply, then total the present values. So we will get 32,170,000 present value, or this is our value in use. So the value in use is 32,170,000, while our fair value less cost of disposal is 31 million. Therefore, the recoverable amount would be 32,170,000 because it is greater than the fair value less cost of disposal of 31 million. So we have to determine if there is impairment. Since the recoverable amount is lesser than the carrying amount, the asset is impaired by 7,830,000. So you have to remember that um, to consider that the asset is impaired, the recoverable amount should be lesser. What if, ma'am, the recoverable amount is greater? What should we do? So if the recoverable amount is greater than the carrying amount, then there is no need to adjust our asset. So the asset is recorded as it is based on its carrying amount, which is the lower amount between the carrying amount and the recoverable amount. Again, if the recoverable amount is greater, there are no adjustments that would be made. There's no impairment gain to be recorded, and wala po'y impairment loss. So if the asset is recorded, for example, at carrying amount, and the recoverable amount, for example, is 45 million. So we will record the asset at 40 million, which is the recoverable amount. Sorry, the carrying amount, provided that the carrying amount is lesser than the recoverable amount. Again, if the carrying amount is lesser than the recoverable amount, the carrying amount is lesser than the recoverable amount, then there are no necessary adjustments. So we will continue to record the asset using the carrying amount. So next is the reversal of the impairment loss. So impairment loss recognized for an asset in prior years shall be reversed if there has been a change in the estimate of the recoverable amount. In other words, if the recoverable amount of an asset that has previously been impaired turns out to be higher than the current carrying amount, the carrying amount of the asset shall be increased to the new recoverable amount. So what does this mean? So previously or in the prior years, naa na tayo gi-recognize nga impairment loss. Ngano ganing na ay impairment loss? Because before, the recoverable amount was lesser than the carrying amount. So, we already have the records on the impairment loss. What if later on, the recoverable amount becomes greater than the carrying amount? So, nakabawi siya. So, yung taas siya ang recoverable amount. There is a need to reverse the previous impairment loss. But you have to take note that when you reverse, meaning you have to bring the carrying amount of the asset to its updated updated recoverable amount. Again, the carrying amount of the asset will be updated to bring it to the new recoverable amount. In doing so, you have to consider also that the extent or the amount trapod sa reversal, okay, shall not exceed the carrying amount that would have been determined had no impairment loss been recognized for the asset in the prior years. So, as a simple guide, you have to get the carrying amount of the asset had no impairment loss has been recognized, and compare that with the recoverable amount now, whichever is lower. Okay? To illustrate, let us go to this example. On December 31, 2021, we have the following balances for this machinery. We have 8 million cost, accumulated depreciation of 1,600,000. Okay, for 2 years expiration or 2 years depreciation. The carrying amount is 6,400,000. On the same date, the fair value less cost of disposal is 5,200,000. Since the recoverable amount is lesser, therefore, there is impairment by 1,200,000. So the entry would be debit impairment loss minus, credit accumulated depreciation. In effect, what happens to our accumulated depreciation? The accumulated depreciation would be increased, okay, by 1.2 million. Okay, so there is an increase by 1.2 million. Therefore, your accumulated depreciation now is 1.8 million. Okay, since this is already 1.8 million, you get the difference. 8 million minus 1.8 million, the carrying amount would be 5,200,000, which is the recoverable amount. So if there is an impairment DI, the carrying amount, the updated carrying amount after recognizing the impairment loss would be equivalent to your recoverable amount. Okay? Again, if there is an impairment and we recognize the impairment, the updated carrying amount after recognizing the impairment is equal to the recoverable amount. The following year, okay, you have here the recoverable amount, which is 6 million. Okay, 6 million. Now we compare the 6 million, okay, the new recoverable amount, with the carrying amount of the machinery. How much is the carrying amount of the machinery? Of course, previously, we have 5,200,000 carrying amount. That's as of December 31, 2021. Okay? And of course, if we will be depreciating it further, that would be lesser than 5,200,000. So obviously, even if we're without computing the updated carrying amount, we know that the carrying amount is lesser than the recoverable amount, or the recoverable amount now is greater than the carrying amount. So pag mas dako ang new recoverable amount, there would be a reversal. But to what extent? Okay, how much would be the reversal? First is we have to get the carrying amount of the asset without the impairment. How do we compute the carrying amount of the asset without impairment? We assume that there had been no impairment loss recognized at all. So therefore, 8 million divided by 10 years times 3 years, okay, it will be depreciated from day 1 until the present date, which is December 31, 2022. So, diba, as of December 31, 2021, 2 years na ang na-expire, plus 2022, then that would be 3 years. So, without impairment, the carrying amount would have been 5,600,000. Remember the rule earlier, if you're going to reverse the previous impairment loss, dapat ang imuhang basis is the lower amount between the carrying amount without the impairment and the recoverable amount. Now, the carrying amount with no impairment is 5,600,000. Compare that with our new recoverable amount. Therefore, you have to use the carrying amount without impairment and not the new recoverable amount. Although we know that the recoverable amount is greater than the carrying amount with impairment. Kani ang gamiton because dili dapat mo exceed ang ato ang reversal. And the effect would be mas muubos pa sa carrying amount without impairment. So the carrying amount of the machinery cannot exceed 5,600,000, assuming that we will reverse na the previous impairment loss. Therefore, the carrying amount of 5,600,000 will be the basis of the impairment reversal and not the recoverable amount of 6 million. So how much would be our reversal here? Okay. So first is we have to update, okay, the depreciation for 2022. So how much would be the depreciation for 2022? Go to your data. You have your machinery at cost. Accumulated depreciation. If you can recall, this is the depreciation before impairment, kani 1,600,000. Then we have the impairment loss, okay, diba? Addition, so 2,800,000. And the carrying amount on December 31, 2021 is 5,200,000. So since we have updated our carrying amount to 5,200,000 due to impairment loss, we will use this amount as our base in the succeeding depreciation. So, how many years left? Diba? 2 years naman to siya as of 2021. So, remaining life is 8 years. So, 5,200,000 divided by 8, that's 650 per year. So, 5,200,000 minus 650, then that's 4,550,000. This is your carrying amount on December 31, 2022 with impairment. So, obviously, it's much lesser than the recoverable amount. So, there would be a reversal. But, this is not the amount you're going to compare with the 6 million. But, that would be 5,600,000 and 4,550,000. Okay? Carrying amount without impairment and carrying amount with impairment. Why is it again that we choose the 5,600,000? Because as a rule, dapat the reversal, the amount of the reversal will not be too much that the carrying amount would be lower than the carrying amount without impairment. So now let's proceed to the journal entries. To record the depreciation debit, depreciation credit accumulated depreciation 650,000. To record the reversal of the impairment, so debit accumulated depreciation, credit gain on reversal 1,050,000, which is the difference between the carrying amount without impairment and the carrying amount with impairment. In effect, what will happen to our accumulated depreciation? So our accumulated depreciation now would be 1,600,000 plus 1,200,000. Okay, so 2,800,000 plus 650. Okay, 2,800,000 plus 650. That's 3,450,000. Then minus, okay, minus 1,050,000 because that's a debit. So our accumulated depreciation now is 2,400,000. And deduct that from 8 million, your carrying amount would be 5,600,000. So, ang iyahang accumulated depreciation na update siya, and it becomes the accumulated depreciation had no impairment been recognized. Now, let's proceed to the cash generating unit. So, a cash generating unit is the smallest identifiable group of assets that generate cash inflows from continuing use that are largely independent of cash inflows from other assets or group of assets. It could be a department, a product line, or a factory for which the output of product and input of raw materials, labor, and overhead can be identified. As a basic rule, the recoverable amount of an asset shall be determined for the asset individually. However, if it is not possible to estimate the recoverable amount of the individual asset, the entity shall determine the recoverable amount of the cash generating unit to which the asset belongs. The cash generating unit must be the smallest aggregation of assets for which cash flows can be identified and which are independent of cash flows from other assets or group of assets. Okay? Now let's go to an illustration relating to the impairment of a cash generating unit. The following are the items in the cash generating unit. The following are the assets, which include the building, land, equipment, inventory. The carrying amount of the CGU is 6 million. Okay. Most often, the recoverable amount of the CGU is equivalent to the value in use because the unit is not to be disposed of or sold. So, most likely daw, the recoverable amount sa CGU is the value in use. Kay mas pilion sa management ang paggamit ana niya because there are many assets involved. So the carrying amount is 6 million and the value in use is 4,500,000. Since the recoverable amount is lesser than the carrying amount, so there is impairment. And how much is our impairment here? That is 1,500,000. Okay, so if we're going to um, record that, okay, we cannot directly uh, charge the impairment loss to only one account. Okay, we need to allocate the impairment loss to the various assets in the cash generating unit. So there would be allocation of impairment loss. First, it will be applied to the goodwill, if any, and next would be to other non-cash assets of the unit, prorate based on their carrying amount. So how much would be the impairment loss that will be absorbed by each of the assets of the cash generating unit? In the problem, there is no goodwill. So therefore, the impairment loss will be allocated to the other assets. So let's get the carrying amounts. So here are the carrying amounts of the assets in the CGU and get their fraction. So just remove the equal number of zeros. Okay. So we have 5 zeros removed. So we will have the following fraction: 24, 18, 15, 3 over 60. Multiply that by the impairment loss. So allocate. So you have 1,500,000 times 24 over 60 times 18 over 60 times 15 over 60 and 3 over 60. So you will have the following allocated loss. So to prepare the entry, debit impairment loss 1,500,000, credit accumulated depreciation building. So we will charge that to the accumulated depreciation of the building. Then credit to land. Okay, since there's no accumulated depreciation for land. Then accumulated depreciation equipment. And then credit to inventory. The following amounts. So you have 600,000, 450,000, 375,000, and 75,000. Now let's go to another illustration. Okay. The value in use of the fine china division is 8 million, and the following are the assets of the CGU. The value in use of one of the asset, which is the building, okay, is 4,500,000. So this is for the building alone. Now let's compute the impairment loss. So the impairment loss is the difference between the carrying amount of the CGU and the value in use. In here, the impairment loss is 2 million. Let us allocate. Okay, so we have the following carrying amounts, and then the fraction would be 5 over 10, 3 over 10, 2 over 10, and 10 over 10. So again, we remove the same number of zeros, okay, to simplify the fraction. So allocate, multiply by 2 million. So we have for building 1 million, equipment 600,000, and inventory 400,000. If you can observe, after you allocate the 1 million to the building, what happens to the building now? The carrying amount will become 4 million, right? Okay. So after allocating our 1 million nga loss, the carrying amount will be 4 million, which is below or lower than the fair value less cost of disposal of the building. As a rule, okay, according to PAS 36, the carrying amount of an asset shall not be reduced below the highest of fair value less cost of disposal, value in use, and zero. Okay? So, dapat daw ma-reduce at the below sa pinaka taas sa fair value less cost of disposal, value in use, and zero. The amount of impairment loss that would otherwise have been allocated to the asset shall be allocated pro rata to the other assets of the cash generating unit. In short, dapat ang extent lang sa impairment loss for the building is only up to the difference between the carrying amount of the building and its individual recoverable amount. Pila naman ang allowable nga impairment loss? Only up to 500,000, which is the difference between the two. But the allocated loss here is 1 million, which is not supposed to be the loss nga i-absorb ni building. So what should we do? The difference sa 1 million and the 5 million 1 million and the 500,000 here would be allocated to the remaining assets. Okay? So how do we reallocate? So we have the allocated loss ganiha. Okay, diba? This is the original allocated loss here. So we have to reallocate the 500,000. Kay supposed to be 500,000 lang yun. Kani nga 500,000 ang impairment loss, which is the difference between 5 million and 4,500,000. So 1 million minus the 500,000 is 500,000 that will be divided among the equipment and inventory, or divided between the equipment and the inventory. So according to their rate, okay, so that would be 6 plus 4, that's 1 million, or that's 6 over 10. 6 over, okay, correct. 6 over 10 and 4 over 10. Or if simplified further, reduced further, that's 3 over 5 and 2 over 5 times 500,000. Okay, this is 500,000. So you will get 200,000 for the inventory and you have 300,000 for the equipment. Now, we have the reallocated loss. So 600 plus 300, that's 900,000. And 400 plus 200, that's 600,000. So now, we have the new impairment loss allocation. 500,000 for the building, 900,000 for the equipment, and 600,000 for the inventory. So, debit, impairment loss, 2 million. Credit, accumulated depreciation, building, only 500,000. Again, asa man ni siya gikan. This is the difference between the building's fair value less cost of disposal, which is the recoverable amount, and the carrying amount of the building. So, only up to 500,000 lang ang pwede niyang i-absorb. And then, we have the new impairment loss for the equipment, which is 900,000. And for the inventory, we have 600,000. Now, let's go to an illustration wherein there is a goodwill. Remember nga, pag mag-allocate sa impairment loss, we will apply the impairment loss first to the goodwill, and then if there is an excess or na sobra, allocate it to the other asset. Okay? For this cash generating unit, the carrying amount is 6 million and the value in use is 4,500,000. So here, there is impairment loss of 1,500,000. How are we going to allocate? First, apply to the goodwill. And next is, the excess is to be allocated among the PPE and the patent. Okay? So, the 500,000 will be divided by the divided between the PPE and the patent. So, the allocation is 300,000 and 200,000. So, the entry would be impairment loss, 1,500,000. Credit goodwill. So, ma-zero out ang goodwill ani. Then, credit accumulated depreciation for the PPE, 300,000. Then, patent, 200,000. Or pwede po, accumulated amortization patent. Another example. Okay, so you have the following items for your cash generating unit. This time, there are liabilities involved. The value in use of the cash generating unit is 8 million. How do you allocate the impairment loss. First is we have to get the carrying amount of the CGU. How to get the carrying amount of the CGU? We add all of the items, all of the assets. Okay, of course, you have to deduct the accumulated depreciation. So the carrying amount of the CGU, which involves only the assets, okay, you have 12 million compared with the value in use, which is 8 million. There's some impairment loss of 4 million. Since we have an existing goodwill, we will apply the 1 million goodwill first, and the excess will be allocated to the other assets. So the 3 million will be allocated to the accounts receivable, inventory, land, and then plant and equipment. Okay, here your accounts receivable is 2 million, inventory 3 million, land 1,500,000, and the plant and equipment is 3,500,000, which is the net of your plant and equipment and accumulated depreciation. And we have here our fraction. Then multiply this by 3 million, this would be their allocated loss. What would be the entry? Okay. Debit impairment loss, 4 million. Okay, diba? This is the computed impairment loss. Then, credit goodwill, 1 million. Credit accounts receivable, 600,000. Inventory, 900,000. Land, 450,000. And accumulated depreciation, 1,050,000. Okay? So we allocate the excess impairment losses to the other assets. Okay? So, can you reverse daw the impairment loss that was charged against a goodwill? Accordingly, PAS 36 states that an impairment loss recognized for goodwill shall not be reversed in a subsequent period. Therefore, ang pwede ra ma-reverse kay katong impairment loss nga na-recognize previously in the other assets. Okay, observe that in the previous problem here, the liabilities were not included in the computation, especially on the determination of the carrying amount, diba? So it is ignored, the liabilities is ignored in the carrying amount of the CGU. According to PAS 36, it provides that the carrying amount of a generating unit includes the carrying amount of only those assets that can be attributed directly or allocated on a reasonable and consistent basis to the cash generating unit and can generate the future cash inflows used in determining the value in use of the cash generating unit. In such sense, 'di ba? Only those that can produce benefits. So, ang katurang assets may makaproduce og benefits. That's why only the assets were included in the determination of the carrying amount as well also on the value in use. Paragraph 76 further provides that the carrying amount of the cash generating unit does not include the carrying amount of any recognized liability unless the recoverable amount of the cash generating unit cannot be determined without consideration of this liability. The reason stated in paragraph 43 of PAS 36, which mandates that to avoid double counting, estimates of future cash flows do not include cash outflows that relate to obligations that have been recognized as liabilities by the cash generating unit, such as payables and provision. We also have corporate assets. So, what are these corporate assets? These are assets other than goodwill that contribute to the future cash flows of both the cash generating unit under review and other cash generating units. Examples of these corporate assets are the head office building, the EDP, electronic data processing equipment, or research center. These are essentially assets that do not generate cash inflows independently from other assets. They cannot generate their own inflows. Thus, the recoverable amount of an individual corporate asset cannot be determined unless management has decided to dispose of the asset. As a consequence, if there is an indication that a corporate asset may be impaired, the recoverable amount of the cash generating unit to which the corporate asset belongs is determined and compared with the carrying amount of the cash generating unit. So we have here an example. The entity has two cash generating units. We have CGU1 and CGU2. There is no goodwill allocated to the cash generating units, and the following are their carrying amounts. The entity has an office building that has not been included in the carrying amounts of the cash generating units and can be allocated to the units on the basis of carrying amounts. So we have here the corporate asset, which was not included in the carrying amounts of the CGUs. The office building has a carrying amount of 5 million. The following are the value in use of the two CGUs. Now, the carrying amounts of the units, including the allocated portion of the building, would be determined as follows. So we have here the data. For CGU1, we have the carrying amount of 10 million. For CGU2, we have 15 million. Now, allocate the value of the office building, which is your corporate asset, among the two CGUs. So, according to their carrying amount. So, 10 over 25, because that's 10 plus 15, so that's 25, times 5 million, so that's 2 million. And then 15 over 25 times 5 million, so that would be 3 million for CGU2. Get the total. For CG1, that's 12 million. CGU2 is 18 million. Compare the carrying amounts with the value in use of each of the CGU. For CGU1, the value in use is 9 million. Meanwhile, the CGU2 has a value in use of 19 million. As a rule, diba, to determine if there is impairment loss, we have to check the carrying amount and the value in use. If ever the carrying amount and the recoverable amount. In this case, our recoverable amount is the value in use. For this problem, since the value in use of CG1 is lesser than the carrying amount, so there is an impairment loss. Meanwhile, in CGU2, since the carrying amount niya is lesser than the value in use, or the value in use is greater than the carrying amount, then there's no impairment loss. Therefore, ang mag-recognize ra og impairment loss here is CGU 1. So, how much would be the impairment loss? That would be 3 million, and that will be allocated between the other assets of the CG1, or what is recorded here as the assets, and the remaining other allocation would be for the office building on the basis of the carrying amount. Remember that the carrying amount of the CGU originally without the office building is 10 million, while the carrying amount of the office building, which is allocated portion, is 2 million. So we have 10 plus 2, that's 12. So 10 over 12 and 2 over 12 multiplied by 3 million, which is our impairment loss here. So the allocated loss to the CGU's assets is 2,500,000, and to the allocated office building to CG1, that would be 500,000, for a total of 3 million. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.